So we had a look at the lease liability and how that's made up. If you remember, the fixed, the in substance fixed, the variable payments based on a rate or an index, the rent reviews going to the market, that sort of thing. Now we're looking at the right to use asset. How much do you put that in? And if you remember how much you put it in, first of all, you take the lease liability that we've just worked out, and that is your first measurement of your right to use asset. So you do the lease liability first, work out all those things, whatever that comes to, that's the start of your right to use asset measurement. Doesn't stop there though, we also have to add on any lease payments that we've made before commencing the lease and taking off any lease incentives received. We also have to add on any initial direct costs and any estimated dismantling and restoration costs in the future. Now, these initial direct costs will be the cost of negotiating, the cost of securing the lease. What they won't be is the cost of designing or constructing. Similarly with the estimated dismantling and restoration costs, that's got to be for the asset. It's got to not be for producing stock, but for the asset. And the double entry for that will be debit asset, credit provision at the start. You could build it up over time as well. Let's have a look at this example then. You've got a 10-year lease for a floor of a building, 50,000 per annum in advance. The initial direct cost of 20, incentives received are 5, the interest rate's 5%, and the present value of 10 lots of 50,000 in advance at 5% is 405,931, the figure we've seen many times. So we know that present value figure, that's basically your lease liability, isn't it? And that's going to be the figure that starts us off for our right to use asset. What do we need to add on to that right to use asset? Well, we need to add on these initial direct costs, don't we, of 20,000. But then we've got these incentives received of 5,000, so we need to take those off, and that gives us an asset of 420,931, which we would then depreciate over the lease term, normally on a straight line basis.